So, moving on. What is the investment plan for the inactive investor? Now, all investment plans differ from person to person. Let me start with the solution for the inactive value investor, the person who does not want to do research and analysis of companies. The best solution for you is to put your money into a low-cost index tracker. Fun fact, Warren Buffett stated in his will that those members of his family to inherit his fortune must place their funds in the very same investment, a low-cost index tracker. A low-cost index tracker is a fund, an ETF, remember, an exchange-traded fund, which invests money into multiple of the largest companies in the world. Now here is a real shock. 99% of hedge fund managers in the long term, say a 20-year period or more, cannot beat the returns of a low-cost index tracker. The reason being, the hedge fund managers charge an extreme amount in terms of fees in order to manage your money, and the unpredictable nature of the market is also the cause for the reason why hedge fund managers many of the time actually underperform the market. Hedge fund managers usually require a large commission on the money they manage. These can range from 0.5% all the way up to 2% plus performance bonuses. This can greatly eat into the compound return you would receive. To put that into perspective, the low-cost index tracker Warren Buffett believes you should invest in carries the lowest commission in the world, 0.03%. When you compare 0.03% to even something like 0.5%, you are keeping an extra 0.47% of the return for yourself. Now, some hedge fund managers do manage to beat the returns on a low-cost index tracker for a period of time, even after their incredibly large fees. But soon the market may catch on to this strategy, and consequently the strategy used by the hedge fund manager loses its outperformance. So, as an inactive investor, someone who does not want to do the work of an investor, the best thing you can do with your money is place it into a low-cost index tracker. There are many low-cost index trackers. However, I would recommend the VOO index tracker. This is the same one that Warren Buffett recommends too. This is a company created by Vanguard which tracks the performance of the S&P 500. The S&P 500, as you know, is the 500 largest corporations in the United States of America. This investment is essentially a bet on the US economy. The US economy has for a long time remained the strongest and the most resilient economy in the world, and I don't see that changing anytime soon. It still has a highly regulated financial system, a robust and hard-working workforce and economy, and a fair political system. It is reasonable to assume, based on these facts, that for the foreseeable future, this will remain the case. It is often regarded as a benchmark to beat for investors, but as previously mentioned, in the long term, there are very few people, who are able to beat it. How much should you invest, you may ask? Warren Buffett recommends you view this the same way as a bank savings account. Any funds you have available to invest should be placed into the low-cost VOO index tracker. It also goes without saying that the more frugal your lifestyle, the more you will be able to invest. Something worth noting. As an inactive investor, this is the best time-tested value investing strategy one can implement in order to grow their wealth over time.